the first tick on the index in flat terrain.
There are so many disclosures, audits, due diligence, etc. that you need to go through that disclose why you're getting a certain amount of commission or fees for doing what you're doing.
We have the mid-cap index, which is up around 47 odd points.
You know, it's a bit of a disappointing day, isn't it? So we've got the market, which is down 70 points.
Above 19,250, but firmly in the red, 60 points down on the Nifty. Sensex lower by 100 points.
Hello and welcome to Markets Today, the show where we track 6 hours of the day's trading action in 5 headlines. I'm Sonia and here are all the top headlines for the day. Sensex and the Nifty end in the red as the F&O contracts for August expire. Financials drag but mid-caps buck the trend. Market regulator Sebi's probe into the Axis Bank Max Life share deal is in advanced stages. Sources say Sebi is examining the valuation discrepancies between the two transactions and the likely loss to public shareholders. That's an exclusive. MedPlus sees 13% of its equity worth over 1,300 crores change hands. Near 13% of Sula Vineyards shares are traded for over 500 crores, and Prudent Corp 2 sees a block of 9% of its equity. SL Group reaches a settlement agreement with JC Flowers Asset Reconstruction Company, but the ARC's stake in Dish TV may not be released until fully executed. BHL gains on order wins. Aeroflex Industries makes a strong debut on the exchanges, listing it over a 75% premium. Oil prices rise as the U.S. government data shows tighter than expected U.S. crude supplies. Separately, China's Purchase Manufacturing Index comes in strong at 49.7 compared to 49.3 for July and ahead of expectations, providing a fillip to sentiment and boosting prices of metals across the board. Well, here's a lineup of what we have in store for you. It's a packed show today. In Market Opinion, Manishi Ray Chaudhary, Asian Equity Strategist, Equity Cash Asia Pacific at BNP Paribas will be joining in. In Big Corporate Voices, Siddharth Lal, the Managing Director of Eicher Motors, and Asad Daud, the Managing Director of Aeroflex Industries, will be with us. Well, straight to the day's market action now. It was a volatile session on expiry day, which saw the Nifty and the Sensex end with cuts of 0.25%. The financials continue to be a drag on the Nifty, with the Nifty Bank slipping over 0.5%. However, mid-caps bucked the trend, ended mildly higher. Meanwhile, the Nifty posted losses of 2% in this series for the first time since March, while the mid-cap index rose 5%. Prashant joins in with the market wrap. Prashant.
Well, it was disappointing for bulls if you're looking at the large caps. The Nifty and the Bank Nifty ended about 1/3% lower, but the small cap and the mid cap part of the market and the small caps really had the day today. So consider this, in the last 30 minutes, 45 minutes, while the Nifty and Bank Nifty sold off, the small caps took off like a rocket. The index added 0.5% in the last 30 minutes of trade. The indices are up on your screen. Let me just run through the bigger boys. So cuts coming through in stocks like BPCL, Britannia and Eicher Motors. There were gains in Maruti, Cipla and HDFC Life. Now we get to the meat of the story, which is the broader markets and small caps really. So these FTSE, MSCI related flows showing up in names like Supreme, MTAR, Tech, Iron Exchange. Rail stocks, so Titagar, Texmaco, some of these ancillary companies like Genus Power, Infra Construction, Dilip Bilcon, Data Patterns, RK Forgings, some of the other names. Healthcare stocks like Gland, Shalby, Rosari Biotech. Idiosyncratic moves in Bombay Stock Exchange has had a fantastic run this August. Kalyan Jewelers, Zensar Tech, Nava, Scient DLM, which is recently spun out of Scient. Spandana Spurti was a big mover. Donier, VST Tillers, S Chand. I could go on, but this is the bulk of the volume-led moves that we saw. Some pullbacks coming through as well. So there were blocks in MedPlus and Sula ended lower. Adani Group stocks were under pressure. So Adani Green, Ambuja, Adani Enterprises, Suzlon and PFC saw some pullbacks. And you also had Gokuldas Exports, which had gone up 40%, pullback 10%. TCNS Brands is another one which saw some pullback. The divergence is increasing between what the Nifty is doing and what the Nasdaq is doing. Since last Friday, while the Nasdaq is up 4%, after today, the Nifty is actually absolutely flat, even slightly in the negative. That can go on, at least in the medium term. In the near term, of course, that can stay, but we'll see. Out of the US, we get an important set of data in terms of inflation numbers, core PCE out of the US, which the Fed watches closely. And that, I think, will either reinforce expectations that, the Fed will go on a hold for some time, or it will turn things around. So, either which way is going to be important when we come back tomorrow. Back to you.
All right, thanks a lot for that, Prashant. Here's some news that has left derivative traders in India puzzled and concerned. A bunch of fat finger trades in the Nifty bank put options at a 90% discount has managed to bypass the National Stock Exchange's limit price protection. This incident happened on the 11th of August. Santosh Nair is here with more details on this. Santosh, what exactly has happened and why did the NSE safeguarding mechanism not prevent this?
Well, as to the first question as to what exactly has happened. So on August 11th, there were a set of trades at a very sharp discount in the Bank Nifty 45,700 put options. Now, the prevailing premium at that time was about 1,300 rupees, but these trades happened at 90 rupees. That's a huge discount to the prevailing price. So it seems to be a case of fat finger, or an erroneous trading entry, as it is called in market parlance. So the speculation is that most likely the traders who put through that trade, now what we hear from market sources is that it was a bunch of trades done through multiple clients who were probably using the same algo strategy, and instead of selling the 45,700 call option, which was priced around 90 rupees, what they ended up was that they ended up selling the 45,700 put option at a sharp discount, but they used the reference price as that of the call options, which is why the error happened. And as to the second question, Archana, as to why did it bypass the NSE's limit price protection mechanism, this again is what we are hearing from brokers, because NSE has said that its LPP, or the limit price protection mechanism, is working fine. But what brokers say is that had that been a single order, probably the LPP would have rejected it. But in this case, what has happened is it has come from multiple clients using the same algo strategy. So what happened is there would have been a flood of orders at that point in time, probably leading the system to believe that these are genuine trades at the fair price, since it's coming from multiple clients. So that is one theory as to why it could have bypassed the system.
All right, on to some market opinion now. Manishi Ray Chaudhary of BNP Paribas says that large cap stocks have provided greater comfort for now. He also lays down his views on the IT sector, which has seen a big comeback. Take a look.
Just like in any category of stocks, I mean, not just mid caps or small caps, one has to be selective. And the investment philosophy should be to try to buy at a reasonable price and at the same time look for growth opportunities and good management quality. If I look at the headline valuations, mid cap and small caps, after this stupendous rally that we have seen, they are trading at at par with the large cap valuations, and in some cases even more. So the headline valuations do give us some degree of, lack of comfort about that space. And I would think, therefore, that, possibly the large cap frontline well-researched stocks, where there's a degree of knowledge among the analyst and investor community, they provide a degree of comfort at this point of time. We had always held to this point of view that one should be selective in this sector and look for those companies which have a strong deal flow pipeline. And there are quite a few of them. So we actually stick to that point of view. We think that the deal flow in the traditional business, and there are sort of two kinds of deals, where the usual, or the new projects in the Western Hemisphere are possibly going a bit slow right now. But the kind of projects which actually lead to significant cost reduction in, let's say, the banking space or the retail space, they are still very much alive. And that's why we still have IT service stocks in our Asian model portfolio in the India sliver. And we see no reason to get out of those at this point of time.
All right, the second headline today, 3 big block deals on Dalal Street today. MedPlus Health Services plunged nearly 7% after about 13% equity worth over 1,300 crores changed hands. The deal took place at an average of 860 rupees per share. Remember, CNBC-TV18 reported earlier that early investors in the pharmacy chain, including Lavender Rose and PI Opportunities Fund, are looking to trim some stake in the company. And Sula Vineyards dropped about 4% after 1.1 crore shares worth 540 crores changed hands on Dalal Street. Sources have indicated that institutional investors Asia PTE may have offloaded the stake. The total transaction is estimated to be over 500 crores. There will likely be a 6-day lock-in on further sale of shares. In more block deals, Prudent Corp slipped nearly 10% after shares worth 420 crores changed hands. 34 lakh shares were sold worth nearly 9% in the company. As of the quarter ended June 2023, promoters held 58.4% stake in the firm. And to the third headline today, and this is a CNBC-TV18 exclusive, Sebi's probe into the Axis Bank Max Life share deal is in its advanced stages. Sources say that the market regulator is examining valuation discrepancies between the two transactions and the likely loss to shareholders. Yash joins in with more details. Yash.
Well, Sonia, this all relates to the transaction under which Axis Bank plans to buy nearly 20% stake in Max Life Insurance. Now, this transaction was supposed to be executed in two tranches. First one having 13% acquisition and the next one with the balance stake. Now, the first 13% stake in Max Life was acquired by Axis Bank at an average of about 32 rupees per share. After this transaction was done, the insurance regulator had come down on Axis Bank and Max Life, stating that the valuation for this transaction was not done as per a fair market value mechanism, and there were undue gains which Axis Bank derived out of this particular transaction. Of course, both entities are penalized by the insurance regulator as well. What we've been given to understand is that the market regulator, Sebi, is sort of investigating the first tranche of the transaction itself, which is a 13% stake acquisition. After IRDA has sort of penalized both entities for the next set of transaction, that is balance 6%, the price per share was revised to 113 rupees from 32 rupees per share earlier, and Sebi states that this difference is nothing but the loss to public shareholders of Max Financial Services, which sold stake to Axis Bank and Max Life Insurance. Just to give you some numbers in this context to understand this better, the first transaction happened at 32 rupees per share, the next 6% at 113 rupees per share. That sort of tells you that the loss to public shareholder could be anywhere about 1,800 crore rupees. This is exactly what market regulator Sebi would be investigating. We are given to understand that an action from market regulator Sebi is expected soon in this particular matter. We've written to all three entities involved in this transaction. Max Financial has informed the exchanges that Sebi had sought information and documents with respect to this particular transaction from the entity. Those documents are submitted with market regulator Sebi, and they've not heard anything after that from Sebi.
Okay, thanks a lot, Yash, for that. Let's slip into a quick break, but stay tuned. We'll be back with all the other headlines that we've been tracking for you in just a while from now. Welcome back. You're still with us on Markets Today. Let's go to the rest of the headlines that we're tracking for you now. The fourth headline today, SL Group of companies have reached a settlement agreement with JC Flowers Asset Reconstruction Company. Ritu Singh joins in with more details on that. Ritu, what does the settlement plan look like?
That's right. We've been given to understand that Subhash Chandra-led SL Group companies have entered into a settlement agreement for their outstanding dues with JC Flowers ARC. Now remember, Yes Bank had an exposure of about 6,500 crore rupees to the SL Group companies, which was transferred to JC Flowers ARC as part of the larger NPA pool, which was transferred from the bank in December of last year. This debt was acquired at a significant discount by JC Flowers ARC, of course, but now as per the terms of the settlement, we understand that the SL Group companies have agreed to repay JC Flowers about 1,500 crore rupees, but over a period of 7 months. As part of the agreement, about 15% of these dues will be repaid in the first 30 days and the remaining spread over a period of 6 months. And in proportion to the repayment that happens, JC Flowers will be releasing the security that it holds against these loans, and that includes real estate properties, shares in Z-Learn. However, JC Flowers ARC has made it clear that the 25% stake it holds in Dish TV, which again was transferred from Yes Bank as part of the deal, will not be released by the ARC until the Subhash Chandra Group companies entirely repay the agreed amount. So a positive development as far as the settlement is concerned, but now it remains to be seen how it's executed over the next 7 months.
All right, Ritu, thanks a lot for that. Well, moving on, Bharat Heavy Electricals Limited gained after it secured an order from a state-owned power producer, NTPC, for setting up a thermal power project in Chhattisgarh. Vivek joins us now. Vivek, the stock has had a phenomenal run this year, but what are brokerages saying?
Well, you're absolutely right. The capital goods space, especially for a company, that had dwindling fortunes in terms of not receiving any orders from the thermal power sector, this has been a rapid turnaround, and especially in the last month, like you mentioned, this particular stock has seen a very sharp surge. Let's have a look at what exactly has transpired in this particular name. Like we mentioned, last 2 weeks itself, BHEL has received orders of over 17,000 crore. So let's have a look at the orders one by one. The first order is the one that we discussed yesterday. It has received an order from NTPC. Now this is for setting up a supercritical thermal power plant at Lara, which is in Chhattisgarh. This particular power plant will have a capacity of 1.6 gigawatts. And remember, NTPC said that this particular power plant will have a price or cost in excess of 15,000 crore. Antique believes that while BHEL has not disclosed the quantum of the order, it should be in the range of 11 to 12,000 crores. The second order the company received was from NHPC, an order worth over 2,200 crores, and lastly received an order worth almost 4,000 crore. This is for Mahan Thermal Power Project. Now, Nuvama believes that BHEL, which continues to get almost 85% of its business from the power sector itself, still has quite a bit of runway in terms of order inflow activity. They believe that 4 to 5 gigawatts is still pending from NTPC as far as FY24 is concerned, and some more order wins could come in from both Neyveli Lignite as well as Coal India. So the order book well in excess of 1 lakh crore at this point of time.
All right, moving on. Aeroflex Industries made a strong debut on the exchanges, listing with gains of over 75%. Asad Daud, the managing director of the company, said he expects to increase the revenue share of the component business from 30% to 70% in the next 3 to 4 years. He also added that the company is working on reducing their debt. Take a look.
As per the last year numbers, about 30% of our revenue comes from the components business, and over the next 3 to 4 years, we plan to increase the share of that and actually reverse it. So in the next 3 to 4 years, we hope that more than 70% of our revenue will come from the components business, because the components business has they have better margins, and that will help us to increase our profitability as well. The moment we increase our capacities, also with regards to our increase in the revenue mix from the component business, I think that will lead to almost a 3 to 4 fold jump in our in our top line. And if you see the growth that we have had over the past 3-4 years, we expect to continue the same in the near future as well. We have already started working on our cash flows, especially in terms of our inventory. And like I mentioned that earlier we were importing about 70% of our stainless steel coil from China. We have started to reduce that already, so that will have a positive impact on our inventory. Also, we are working to reduce our debtor days in terms of the amount of credit that we provide to our customers. So hopefully in the near future there will be more cash flow from operations, which will help us in building up our capacities. So currently our working capital days is about 100 to 105 right now overall. We expect that to come down in a phased manner, obviously over the next 1 to 2 years, to at least 75-80.
Well, Maruti Suzuki is the other stock that gained 2%, hit a record high today after JP Morgan put a positive outlook on the stock. JP Morgan continues to have a neutral view, though. They have a target price which is around 8,800 rupees. But they now have the stock on a positive watch list, because they talk about how consensus is building, a positive growth outlook and optimistic scenario for Maruti Suzuki. They also speak about how the market share improvement is something that has sustained, and that's something that they like. In the month of August alone, the market share has now hit almost 44%. Margin improvement against the backdrop of rising discounts and inventory is also another positive that JP Morgan puts out in their report. But they also speak about how there are, a lot of triggers for the stock to outperform in the very near term. And some of those triggers, of course, include revenue growth, margin improvement, as well as, an improvement in the market share of the company. And hence, they've placed the company on a positive catalyst watch going forward. In terms of, the top line growth, they speak about how the wholesale sales for Maruti are picking up. That's what channel checks have indicated. And that should be strong in the months to come as well. And a couple of things about market share. The August retail market share, as I said earlier, was at 43%. They expect market share to improve further. Also, the margin expansion will be because of the stronger product mix, which involves more of sales of SUVs, and that should lead to a margin surprise in the quarter to come. Hence, Maruti was the stock that hit a fresh record high today. But in some important news, Sebi has proposed that registered entities should not have any association with unregistered finfluencers. The regulator's consultation paper has recommended that no confidential client information must be shared by registered entities. Yash joins in with the key details. Yash.
There are multiple board meetings from market regulator Sebi, and every time the question which was posed to Sebi was that what is it doing on the issue of influencers and promotion of market related content in terms of advice on stocks, IPOs, mutual funds, so on and so forth. Finally, there's a consultation paper which Sebi is released on the same. The intention is very clear, asking Sebi registered entities to disassociate themselves from the unregistered entities, which includes finfluencers. There are two important points which Sebi wants to achieve. A, reducing this association between registered and unregistered entities, and second one, disrupt the revenue model for these unregistered entities, including finfluencers. What Sebi said, to sum it up in 5 quick points. The first one, no Sebi registered entity to have any association with unregistered finfluencers. This covers all monetary and non-monetary association, covers all agents, representatives of the unregistered entities, also covers promotion of every kind of product. Second one, Sebi registered entities shall not share any confidential client information with these unregistered entities, including finfluencers. Third one, Sebi registered entities shall not pay any referral fees based on trailing commission. Now, there are two important points for the registered finfluencers as well. Sebi has said that these registered finfluencers will have to display registration number, contact details, investor grievance helpline, so on and so forth. Also, all needed disclosures will have to be made by these registered entities or registered finfluencers on every kind of content that they put out.
Okay, thanks a lot for that. Important, consultation paper put out by Sebi there. But moving on, the BSE stock fired up after HDFC Securities upgraded it to a buy. The brokerage firm also expects BSE derivatives market share to reach around 10% by the fourth quarter of this fiscal. Surbi is here with more details. Surbi.
They're largely, betting on the equity derivative segment. So as you said, they've upgraded it from an add to a buy rating and also raised the target price to 1,230 rupees from 940 earlier. So as I said, they're seeing some success in the equity derivative segment, and which is largely led by the weekly index options that was started back in May 2023. Now the market share in equity derivative segment for the month of August is 3.4%, which was nearly nothing in the month of June. So they've gained 3% market share, and they also expect the derivatives market share to reach 10% by Q4 of this fiscal itself, and this will be led by onboarding of new large number of brokers, also launch of newly weekly index contracts, increased hedging activity, and also continued increase in the number of active traders. They expect a revenue and an EPS compounded growth of 19% and 25% respectively over the next 3 fiscals. So it's a very solid upgrade on BSE by HDFC.
Okay, in more stock-specific news, Eicher Motors slipped 2% in trade. Eicher Motors Managing Director Siddharth Lal said they are not in a tearing hurry to launch an EV. He adds that they expect to launch a Royal Enfield EV by 2025. He also said the company already has electric vehicles in various stages of development, but they want to test and refine them further.
The idea is not to come out with the product quickly. The idea is to come out with an amazing product, right? So a product that will actually interest people, will change the market dynamic. So that's the idea. So firstly, there's zero delay. Our plan has always been to be out in the market in 2025 sometime. That still stands, so no delay. We're always open to partnership, but we don't partner much. So in our last 20 years, we've not really partnered with anybody. We've done everything on our own.
Well, the fifth headline today, oil prices rose as US government data showed tighter than expected crude supplies. Worries over Hurricane Idalia and expectations of an extension of Saudi Arabia's output cut also supported prices. Separately, industrial metal prices surged 1 to 3% overnight. Manisha Gupta joins in with more on that. Manisha.
This has been a strong day for the commodity markets across sectors, whether it was energy or metals for that matter. Energy, within that, the crude oil prices have surged above $85 a barrel. It's the second straight day that we are holding above 85 as well. The strength continues as the U.S. crude stocks declined by more than 10 million barrels, and we are looking at lower lows being created for this year. Apart from that, it is the Saudi Arabia which may cut output in the month of October as well with 1 million barrels per day, and Saudi Arabia is expected to increase prices for Asian customers in the month of October, which would be the highest now for this year. Apart from that, it's the Hurricane Idalia, which may disrupt oil facilities in Gulf of Mexico. All of those factors clearly have been supportive. For metal prices, it has been about the demand on ground picking up, where we have seen discounts now turn into premiums. September, October are known as strong demand periods in China, and then it is also the weak U.S. economic data, the weak U.S. dollar that seem to be supporting, and the sentiment that U.S. perhaps will not hike interest rates for the month of September. So the China PMI data that came in yesterday was better than previous month and better than what the street was anticipating. So we are looking at small pockets of better data now coming in. Is the reason you have the steel prices trading at a 3-week highs, iron ore at a 4-week highs, copper prices gained 2% overnight. That one is trading at a 2-week highs as well.
All right, Manisha, thanks a lot for that. With that, it's a wrap on this edition of Markets Today. Thanks a lot for watching.